Okay, we'll discuss how to. Hello, scholars. Today we are going to discuss about cash flow management, and I made a acronym to remember the headings. When we discuss about cash flow management, it is like cash or money coming in your bank account or in your hand, and cash going out of your hand or out of your bank account. This is a different from income expenses. It is a cash. That means money coming in, money going out. And how do we manage that? That is a cash flow management. So there are four ways via cash come in your hand. We can say that cash inflow. And there are four ways money can go out of your hand or bank account. That is cash outflow. I made this acronym WALK is for first is working income, where you work and earn. Second is asset income, where the income is earned from the assets. Third is loan. This is not income. This is you are taking loan. It can be from bank or relatives or anyone. You are taking the loan, but money is coming in your hand. Fourth is kind or gift. You may get some kind, act of kind, may some gift from relatives or pharma company or anyone, gift, act of kindness. Poor people get subsidies from the government. So that is also under this heading. So all these four headings walk includes most of the sources of money incoming. Similarly, there can be four ways where money can go out. So one is spending, where you buy goods and services and spend for living, spending. Second is you can invest that money and buy some asset. So asset investing. If someone has taken the loan, he has to repay, make a repayment. He has to pay EMIs. So that is the third way. And similarly, fourth way, you might give gift to relatives or friends and gift to the government or society. It is a tax. This is a major part in top 2% of the people of country. So you are lucky if you are in a taxpayer category. So these are the four ways money can go out. It's very easy to remember. Walk and Salk formula. Walk, Salk. Okay. What you have to do is you make your own cash flow statement in which you project for next this year 2026 how much cash inflow, or you can create last year so that you can have objective data, how much cash entered in your hand or bank account via four ways, and how this distributed into all this SARC formula. If you have some cash in your hand or bank, you can put into asset, whether it is in your hand. So all your money can be distributed into this SALK SALK formula. This budgeting will help you to do self-assessment. Please understand, personal finance is a personal. It means your personal finance will be different from your friends. So unless you do things, actually, you may not understand by just watching videos or reading, because what we are going to talk or I will talk, it is general formula which is applicable to most of the people, but you have to personalize that information to yourself. So this is a assignment to you. You create a cash flow statement of last year 2025, how much money came in whichever the way and how many went. This will understand your pattern, where money is coming and where it is going. Okay. Now the working income comes via three ways: either salary, profession, or business. We are going to discuss detail about this in taxation, what exactly salary means, what exactly profession, what is business. Here, salary means you are working for someone and he is giving in the form of salary, wages, or compensation, commission, benefit, everything. That is includes salaried income. Profession income is applicable to the professional like medical, CA or architect, those who are profession where you are involved in the business or profession. Maybe you may have some employees, but you are the main pillar. If you stop working, that profession ends. You cannot sell the profession. You can sell the business. Business is different and profession is different. I made a definition very simple just to understand. Theoretical definition is different, but practical definition is very simple. You cannot sell the profession, you can sell the business. So hospital can be considered as a business, but if you have OPD and clinic, or if you stop practicing that, you cannot sell your patients to someone else. Another headings, we call this as a passive income. This is active income where you have to exchange your time and efforts to earn that money. Here, you may not have to put a lot of time and efforts, and that incomes come from the asset. Headings are capital gain, profit, rent, interest, dividend. Now, you may ask, there is a profit in business and this as well, but certain cases where you will separate your asset income under the profit as well. For example, if someone hit the intraday trade, although it is coming from the asset, it can be considered as a profit, speculative income. So to remember, it's very easy: salary, profession, business. And here, CAPREAD. Whenever I teach so that you will remember for 20 years. Okay. Just giving information and running away may not be useful to you. My intention is that you should remember concept your next 20 years or throughout your life. So how to remember the asset income? CAPREAD. Okay. Capital gain, CAP is a profit, RID, CAPREAD. Okay. Read includes rent, interest, dividend. So CAPREAD income, working income. Okay. We are more concerned about this. In the investing, we are more concerned about this. So this is how life of person is. First 30 years or start life start with the check-in on this planet, birth. Then first 30 years goes to learning in college or school, college, universities. Next 30 years you earn by giving services, doing business and earn. And next 30 your retirement life, where your working income may reduced or stop, and you will be living on the income from your asset income or child's income. Now, the 100 year ago, the children were the retirement plan. People used to produce children so that children will take care of when you become retired after 60. But the present generation is different. It is not guaranteed that your children will take care when you are old. They might live to different country, different city, and I'm sure the trend is rising. And after 20 years, my prediction is that 90% of the children who are educated postgraduate will not stay with the parent. Only illiterate children or for the people who are doing farming, they may stay with the parent. But your children, and since you are postgraduate, your children has to be graduate, postgraduate, and they will not stay with you. This is my prediction. 90% of the children will not stay with parent. Probably they will not take care in the retirement as well. They may give, some of them may give money to parents. Some may not, because they have their own life. So why to take that risk? So you have to make a decision whether you want to depend upon capital or child. Capital means you create a wealth, capital which will create income. That is a perfect sense in current scenario. It does not mean that children will abandon you, but that is a possibility. There are certain examples in society. You will see that. So this is a risk. Okay, that doesn't mean you will stop disbelieving children today onwards, but just be prepared. And on the top of it, why to be burden on them? Let them live their life. Okay, so that's a perfect sense to create a retirement corpus and capital. And after 90 years, 99% will check out. So I'll take only 90 just for the symmetry, 30, 30, 30. Beyond 90, if you are there, you are anyway load on the planet. Okay. So now you have the choice to live unplanned or life or planned life. So if you are planning finances, you do the planning for the current spending. That means spending for this current year and future spending. Be aware, investing is future spending. You have to sell or rent your asset to get income and spend. If you don't get the income from the asset, that asset has no value to you. For example, if someone buy 100 acre of land and he never sell it or no income from it, it has no value. Even if and it will be passed to children, and even if they don't use it, it is just a soil. Okay, so if asset is not generating income, then it is not, it might have paper value, but in real life it does not have any value. So investing is future spending. You may have to plan for unplanned expenses so you can estimate your future spending, create corpus, it is planned, but there are certain things which happen unplanned, or some contingency or some expected things happen like covid happen or anything. You may have to prepare. Here we say these are the knowns. These are known expenses. These are unknown. So you can prepare life for knowns and unknown. Okay, this is a financial planning. In this course, the objective is not to make you a speculator or intraday trader. We don't claim any sort of return or we don't sell financial product as well. Our main focus is education and knowledge. So the objective is that after 3-4 months, you will have some basic knowledge and you will start applying knowledge and skill. So what is that? Cash flow management based on the walk and sock formula. Investing, which might include long-term investing, short-term investing. We are going to discuss detail about which financial instrument you can buy. Then there are certain questions you can write down in the notebook now only. In investing, there are 5 questions we have to answer. First, what to buy. Second, why to buy. Third, how much to buy. Fourth, when to buy. And fifth, when to sell. If these 5 questions are answered, then only that investing knowledge is adequate or enough. If anywhere, whether you are attending any course or attending some session on television or social media, YouTube, if these 5 questions are not answered, if that information is not complete. What are those? What to buy, why to buy, how much to buy, and when to sell, period. We are going to answer these 5 questions throughout the course. Next is tax management. This year we are stressing more on tax management. And the reason was that some people were cribbing, or some people were feeling that IMP course fees is high, etc. So I thought let's focus on some tax management, and scholars will be able to save much more tax than what fees they paid. Okay, so that's why in this first session we kept as a tax management. First live session will be focused on tax. The reason, if you have knowledge of tax management and then you have the March month to execute that information, so you will save the tax in next one month only. Okay, so your fees will be recovered in the tax saving itself. So there are 2 objectives in the tax management. One is reduce tax, other is increase post tax income. Okay, tax reducing is very simple. Don't declare the tax, don't declare the income. But that is not the ideal way of tax management. It is not tax management, it's a tax evasion, and that is not legal, so we don't discuss it. So what is the main objective is your increase post tax income and declare the income, still reduce the tax. Okay, so there are twin objectives: declare the income, reduce the tax, and still increase the post tax income. How it is done, I am going to demonstrate. I will take some cases, maybe I'll collect data from scholars, and I'll discuss those cases without name. Basically, I'll take the case based discussion. I'll discuss few cases so you can correlate that this case is like me and I can do like that. So I'll take some cases from the scholars and I'll explain the tax management. Okay. So my request is very simple to you. Please watch videos daily on WebLMS. Second, respond to assessment forms. Those are Google forms posted in the WebLMS. It is for your self assessment. It is for your self reflection. Okay. If you never do the self reflection, self introspection, you cannot improve the things which can be improved. Visit WebLMS at least once a day. Watch all the videos which are posted in the WebLMS. One more thing, be aware that there are some old videos of Step 1 course, which we conducted last year, October. So now we have posted it just as a complimentary, or we can say free of cost to the IMP scholar. They are not IMP videos. IMP videos is this is the second video. The first video was introduction, and this is the second video. There will be 3-4 videos in a week, maybe every alternate day. Video length is 10 to 20 minutes. And how to watch that video? I suggest don't increase the speed of the video. Reason I'll tell why. Although we have the 1x, 2x, 1.5, 2x, 3x, I suggest if you're watching for video first time, watch on first 1x. The reason I'll tell you, it is not just information. It is about storing, understanding the information. It will take some time. And when I talk, it is more than just information. Okay. There is some information which is communicated via pause, speed, intonation, and stress on the words that have impact on understanding and memory. There are strategic pause when we are communicating. Even that pause is a communication. When you increase the speed of video, that effectiveness of communication will not be there. So if you're watching for first time, don't watch on increasing the speed. So you are giving 20 minutes per day. You can take out from different buckets where you waste your time on social media and your channel. You can use this for learning purpose. Okay. Don't be in a such hurry that you don't have 20 minutes in a day. Okay. We'll discuss how to time management later on, but today it's enough. Thank you very much.